What stocks will do well in 2016? By www.profitabletradingtips.com. It is that time of year again to list stock picks for the next 12 months. We start with a list from Barron's, where the stock picks for 2016 are all large cap blue chips. Barron's polled their favorite investment advisors and listed stocks that were picked by 3 or more individuals. Warren Buffett famously once said that one of the primary purposes of stock market forecasters is to make fortune tellers look good. And as usual, he's right. But I nevertheless think it's worthwhile to make an exception for a select group of advisors who have produced above average performance in both the up and down phases of the market's last 3 cycles. They have done this by either picking the best times to be more or less heavily invested in equities, or picking the stocks and mutual funds that rise during bull markets and fall less than the broad indexes during bear markets, or both. The stocks listed by Barron's and their experts are these: Berkshire Hathaway, BRKB, Boeing, BA, Chevron, CVX, Gilead Sciences, GILD, Lindell Basel Industries, LYB, Pfizer, PFE, Philip Morris International, PM, Schlumberger, SLB, Target, TGT, Travelers, TRV, Union Pacific, UNP. What are the factors that indicate whether or not stocks will do well in 2016? They are the usual ones for picking stocks, namely a strong product line and sales, sound financials, strong research and development, a moderate to low PE ratio, and the prospect of a comeback in stocks that have been driven down by various factors. What stocks will do well in 2016 from this list, and why? We would like to look at Boeing, Chevron, and Schlumberger. Boeing put on a last-minute rush in the last 2 weeks of 2015 and closed orders for 30% as many planes as it sold in the preceding 50 weeks. Here are Boeing's orders for 2015. 633 gross orders for single-aisle 737s, 97 Dreamliner 787s, 58 wide-body 777s, 49 Boeing 767s, 6 747s. Nevertheless, Boeing sold about 200 fewer planes than Airbus in 2015. We are not sure how Boeing got into Barron stocks that will do well in the 2016 list. Chevron is a big oil stock, and big oil stocks have been hurt by low oil prices. The street rates Chevron CVX stock a hold. We rate Chevron Corp as a hold with a rating score of C. The primary factors that have impacted our rating are mixed, some indicating strength, some showing weaknesses, with little evidence to justify the expectation of either a positive or negative performance for this stock relative to most other stocks. The company's strengths can be seen in multiple areas, such as its reasonable valuation levels and largely solid financial position with reasonable debt levels by most measures. However, as a counter to these strengths, we also find weaknesses, including feeble growth in the company's earnings per share, disappointing return on equity, and weak operating cash flow. Investing in Chevron is investing in a comeback of the price of crude oil. Schlumberger. This also is a comeback play as its price falls. Schlumberger sold for nearly $120 a share before oil prices started to fall in 2014 and now sells for $70 a share. As noted in Google Finance, Schlumberger N.V. is a supplier of technology, integrated project management, and information solutions to the international oil and gas exploration and production industry. This is another comeback play for when oil comes back up. For more insights and useful information about trading stocks, commodities, forex, or options, visit www.profitabletradingtips.com.